2016. November 2016, question number 1. These are very good classical question of a foreign subsidiary, All right. So now that all of us have the question, we should be able to go ahead and read it. We are told H Limited, a public limited company based in Kenya, owns 75%. Owns 75% of the ordinary share capital of S Limited. So automatically, S becomes our child. We are able to control this child called S because 75% is very high. That's a controlling interest. 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 So H Limited, a public limited company based in Kenya. Kenya is the headquarter. Owns 75% of the ordinary share capital of S Limited, a public limited company based in Rwanda. H Limited acquired S Limited on 1st May 2015 for 1,200 million Rwandan francs. They should call it Rwandese francs. All right. So the most important thing is that the date of acquisition, the DOA, is 1st of May 2015 for 1,200 million Rwandese francs. When the retained profits of S Limited were 800 million Rwandese francs, the functional currency of this foreign-based subsidiary is the Rwandese franc. The functional currency of H is the Kenya shilling, and the functional currency, of course, of S Limited is the Rwandese franc. All right. S Limited has not revalued its assets or issued any share capital since its acquisition by H Limited. The following financial statements relate to H Limited. So they've given us H Limited, S Limited. We have income statement, blah, 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 blah. So what I'll do, ladies and gentlemen, because I've been able to establish the group structure, this, of course, is H that has S, 75% of it. We've been able to know that straight away H is the parent. And then, of course, S is a subsidiary because of their shareholding. And we know that the date of acquisition is 1st of May when? The date of acquisition is 1st of May. Date of acquisition is 1st of May 2015. How about the date of the financial statements given there? If I go to the financial statements given there, I can see they are dated. We have the statement of financial position. We have the income statement. They are dated on 30th April 2016. So please count number of months. Girls who are around here, please count the number of months for us between the date when we acquired this subsidiary to the date. It's 12 months, isn't it? So I can even start jumping in an exam. But of course, people think I'm a madman or a mad woman for that matter. When I get 12 months, I'm so sure of one thing. If the number of months in between here are at least 12 months or more, if we have 12 months, 13 months, more than a year, we know that there is one thing we will not do. We shall not be prorating years. If the duration here, somebody will tell you that 2 years start prorating. No. We only prorate if the duration we stayed with the subsidiary is less than a year. If the duration when we stayed with this subsidiary is less than a year. Yeah, there is no prorating. So in this case here, you can smile a little bit. 12 months, no prorating. So then once I do that, the examiner has not asked you for the workings of Goodwill. If you look at the question, ladies and gentlemen, asked there is a straightforward question which has got specific marks. And easy marks, trust you me. This examiner has asked you to provide a consolidated income statement and a consolidated balance sheet or a consolidated statement of financial position. All those other workings will not be carrying any marks, trust you me, in CASNEP. No marks, unless the examiner tells you expressly calculate Goodwill. So then what I'm supposed to do, I'm supposed to run very fast and put down the pro forma income statement and the pro forma statement of financial position. Pro forma means don't do adjustments. You'll do adjustments later when you read the additional information. So no adjustments whatsoever. But as I do this pro forma, given that this is a foreign subsidiary, a subsidiary in a foreign country, there are things that I'm supposed to know. Of course, I can't take like a Kenya shilling, I add directly to a Rwandese franc. If I add directly, then I'm an ID10T error. automatically that means that I'm an ID 10T error if I add directly. If you take in this case here, for example, 10 Kenya shillings plus 20 Rwandese francs, if you add, and then you tell us it's 30. So the resulting figure, will it be making any sense? So it will be called 30 Kenya shillings Rwandese francs. No, it means I have, first of all, in this case here to translate. Of course, remember, this is our joke in class. Don't take this thing very seriously. It's our joke in class, and I normally call myself. Don't say that mwalimu, this mwalimu, when you clear your CPK, and then you start telling other people that this guy used to call us idiots. He used to call us idiots. No. I'm not that type of a teacher. I'm not I'm not that type of, I just want to make my classes what here lively. There's nobody who is an idiot in this world. Trust you me. Everybody, we have our own talents. And I mean, God's gifts, many. There is nobody who is an idiot in this world. Nobody. All right. So in this case here, then we must Martin, we must do translations. When I'm translating income statement items like revenues, incomes, expenses, which rate will I always use? 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 Average. Income statement items, always use average. How about statement of financial position items? What should I do? Always use statement closing, the end of year closing. Always use closing at the end. Yes, always use closing. Once you appreciate those two things, or rather, there's also a third thing, something like goodwill. You see, goodwill, we have goodwill at acquisition, net assets at acquisition. Those things you shall always use the opening rate, or what you also call historical rate, the rate which was applicable at the date of acquisition. So it's self-explanatory, and I should be able to get all the marks, really. I should be able to get all the marks here. So we shall start with, ladies and gentlemen, we are simply putting up a pro forma without picking up our calculator. So we have here a consolidated income statement, a consolidated income statement, a consolidated income statement, a consolidated income statement. Of course, I know there is something that I've never seen my students missing out at all. The titles of the financial statements, my students are very good at writing them. So they know it's consolidated income statement for the period ending. That is normally written very well. And they even come and write the name of the parent. So like now, this will be the H. So I'll not be labor really wasting time here to write this. These ones you can write them for me, because I'm so sure that is something that I've never seen anybody from section 1. I've never seen anybody missing out on this. Actually, ironically, what we normally get in exams are situations where students write these titles nicely, and then inside here, blanks, nothing. So you get like a page, one page, age limited, consolidated statement of financial position as at. Then they underline, but nothing below. That will not be your portion. Our portion is different. All right. So, ladies and gentlemen, we start with revenue. So revenue, what do we have there as revenue? So revenue. So revenue, ladies and gentlemen, we have here, I can see 2,000 plus 1420. 2,000 plus 1420 plus 40. Look at this. Can somebody give me the total? Can somebody give me the total here? Can somebody give me that? Look at this. Can somebody give me the total very fast? I know you guys can easily give me the total here. Look at this. It's because these are Kenya shillings. And these are Rwandese francs. You can't add. These are Rwandese francs. You can't add. So we have to convert these Rwandese francs to Kenya shillings. So do we have a rate? Do we have a rate of exchange? And remember here, we are using average rate. So do we have some average rate? Down there, you'll be able to see the rates. 2, right? 2 years. So the question is this 1420, ladies and gentlemen, should I multiply by 2 or should I divide by 2? Pantapotea. Multiply, divide. Please be yourself. Don't work with my ID10T errors, intimidation threats. Yeah, because, ladies and gentlemen, we are told here that it is 2.0 Rwandese francs to 1 Kenya shilling, 2 Kenya shilling per Kenya shilling. So then how about 1420 Rwandese francs? So if I cross multiply, it'll be 1420 times 1 divided by 2. 1420 divided by 2 like that. So please don't give me an answer. So what I'll do, I'll come and divide this by 2, this alone. If we had 9 months, I would have taken here times 9/12. But here there is no proration. So this examiner is very nice for me. And once I've started dividing here, then I'll divide now everything downwards. So from there, I can see, ladies and gentlemen, that the next thing is called the cost of who? Cost of sales. So I have cost of sales. So cost of sales, what do I have there? So cost of sales, what I have, ladies and gentlemen, there is 1200. Is 1200 plus 960. I'll have to divide this by 2 because it's average throughout. So I'll leave space for gross profit. I will leave space for gross profit. So after gross profit, we have the distribution and administration expenses. I'll call them distribution costs, to just simplify my life in this world on earth. So we are talking of 300 plus that 200 divided by 2. From there, ladies and gentlemen, we have profit from operations. Profit from operations. I'll leave some space there. And then we have interest receivable, interest payable. These two, I'll be capturing them later on under interest expense or finance cost, the two. The two, I know whenever they're given separately, interest receivable, interest payable, I would rather leave them like that because later on, I have to really consolidate the two, subtract whenever possible to be able to get what we call finance cost. So I can leave some space for finance cost, like 1 or 2 lines for finance cost there, and then I should be able to get profit before tax. Profit before tax. After I get profit before tax, the next one is income tax. Income tax, there is no major working there. So income tax, I will take 200 plus 90 times, not times, but divide by 2. And then now I have profit for the year. We have profit for the year. All right. Profit for the year is what we call the profit after taxation. So I'm leaving space here for the interest. I'll be able to consolidate those two later on and then give you guys, in this case here, what we call finance cost or just interest expense. Very, very good. So I will not start working because of space. Of course, I can go to the adjustments because of my space, which is very limited. But if I'm the one doing this exam, I will not even start looking at the additional information because I can see this examiner also wants me to consolidate the balance sheets. So then what I'll do, today I have some space here because they gave us quite a brief income statement. What I will do, I'll come very fast here and write the name of the group is H group. Then I have here consolidated statement of financial position, consolidated statement of financial position, and then we shall always start with, ladies and gentlemen, non-current assets. Non-current assets, are you able to see non-current assets? Are you able to see the non-current assets? So non-current assets, what do we have here for non-current assets? Non-current assets, ladies and gentlemen, non-current assets, we have property, plant, and equipment. So property, plant, and equipment, we have 2970 plus, we have this kwacha, not kwacha, but Rwandese francs, 1460. So this 1460 has to be translated. But now remember, we have crossed the line. We are no longer in the income statement. We have changed lanes. If you are driving a very good car, of course, whenever you change lanes, I mean, you feel nice. right? So you've changed lines. We have gone to the statement of financial position. So statement of financial position, what rate should I use to exchange the Rwandese francs? Closing rate. You are very bright. Martin, thank you very much. We are using now 2.1. We're using 2.1. So 2.1 there. So 2.1 there. What do we have 2.1 there? What do we have 2.1 there? 2.1, let me just check 2.1 whether it's closing. Closing is the date of the financial statements. And the date of the financial statements, yes, given there is 30th April 2016. 30th April, yeah, 2.1. And remember, we started dividing. So we'll divide throughout. So divided by 2.1. Do we have any other non-current asset? Do we have any other non-current asset? Oh, yes, we have in this case here, investment in S Limited. Who is S? S is our subsidiary. Subsidiaries and gentlemen, I will need a working for Goodwill. That will be replaced by Goodwill. So I need a working. Trust you me, a working that I will never get time to do in an exam. It's easy, but I'm telling you, especially when the examiner tells you to do a consolidated income statement and a consolidated statement of financial position, what do you think? Perhaps I could be wrong. Do you think there is a lot of luxury of time really here when he wants you to consolidate, to do two consolidations? Do you think it is that easy? When the examiner gives you to consolidate income statements and he also wants you to consolidate statement of financial position, that is an examiner who doesn't like you at all, because he wants you to stay in this kind of a question for more than 1.5 hours. That's his intention. You should be able to know that. He wants you to stay here 1.5 hours. And in most cases, like if you look at this sitting, when he gives you this kind of a question, straight away, question number 2 will be group cash flows. So if you do this, take 1.5 to do this. And then, of course, group cash flows, again, if you are ID10T error, I mean, this examiner in this case will come and straight away ring the bell. When they ring the bell, and then they tell you it's 5 minutes to the end of your exam. That is the time in this case here you have all your hair standing up. And then you start sweating from the wrong places. You would rather sweat from anywhere, but not here. Not here, forehead. Never sweat from the forehead, because everybody at your age will be able to know that this man is now panicking. That is the time when now everything is falling down. So many times I've helped them. We have all inazana makalamu. Inaanguka yote pungulu, unamuokotea. Kidogo kakileta pako unachoka na unamwambia mzee, sasa we jipange. Unaona? Because ujamaa hakujua mambo ya time management. The examiner wants to waste your time for you. All right? Your time for you. All right? Is there anybody, especially for AFR, please be very honest with me. Anybody who has ever done, is there anybody who has ever done AFR examination and went through what I'm talking about? Anybody who has ever tried this AFR exam and went through exactly what I'm talking about? It's good, guys are coming up. AFR is all about time management. Yaani unasikia nywele zinasimama mpaka unasikia kujikuna. Very, very bad. Very, very bad. Very, very bad. Very, very bad. We shall overcome. We shall overcome. Asir. Not this semester. Let me tell you something. You know, you need to really, and that's why if you look at how I'm teaching group consolidation, it is only like now this question that I'll be able to balance to the end, and maybe 1 or 2 for your learning. But otherwise, like if you go doing a question, or rather a working of retained earnings, trust you me, I'll teach you again. But you want to show your examiner that you are a superstar. Kikuyus will tell you that you want to show this examiner that you've got hinya. Nothing like that. Nothing like that. The workings you will leave to the examiner for purpose of what here? Time management. Because you see, for AFR, for you to pass AFR, you must attempt all the 5 questions. You know, there are many things that people look at because of this cutoff thing. Many things. You must attempt all the questions, and you should never leave any theory question outside. You must attempt. And for you to do that, you must give maximum number of minutes should be about 40. If you surpass the 37, 40 per question. If you do that, straight away next semester, I will teach you in a great subject called BDA, not AFR, not AFR. Omokua, you must use your calculator. Thank you. It's good you brought up that. You must use your calculator when, don't waste time in other things. After you realize that there are calculations that you have been able to do proper adjustments, use your calculator, because the examiner again marks what year, the final answer. And I promise to send you a marking scheme, which I haven't yet sent you, for you guys to see how these things are what year marked and why sometimes, like now, don't think that Mwalimu never knew that they never finished yesterday's question. I know I had retained earnings there, which I never did. And I'm not apologetic because I know I'm preparing you guys for the final exam. That's my objective, Because final exam will be about what year? About 30-35% is theory. Group consolidation will be there, group cash flow will be there. And then you have the theories on sustainability reporting, integrated reporting, so many theories, etc. So let's get back to this. So we have non-current assets. So we have property, plant, and equipment. We have goodwill. This one we need a working. Then, ladies and gentlemen, from there, we have after goodwill, what else? So they're giving us loan to S Limited. So loan to S Limited, remember that this is our subsidiary. We can't give it a loan. But the most important thing you are supposed to know, according to IAS 21, whenever you give your subsidiary a loan, you must always give us foreign exchange loss or gain. Because you see this loan, I gave you this loan when the exchange rate was 100 Kenya shillings per dollar. And right now it's 150. You've lost. So according to IAS 21, this loan on S, of course, I will not be able to capture it anywhere in my group accounts because it's a fake loan. But later on, especially when I go to the income statement, I'll be able to introduce a loss or gain later on. So I know at the back of my mind, I know, and that is an easy working, by the way. That one, don't run away from it, because it's about taking loan at the beginning and loan at the end, and then you translate, and then you see the effect. That's a very easy working. I'll be able to do that. That's a very easy working, but I'll not do it now because now I'm still doing the pro forma. I'm still doing the pro forma. Now, ladies and gentlemen, after that, I can see here current assets. So current assets. So for current assets, this examiner has consolidated everything. So mine is simply to come and add. So for current assets, I have 3550. We have 3550 plus 1020 divided by 2.1, like that. So I'm through with the assets. Then I should be able to go to the equity section. So equity and liabilities. So equity, we start with share capital. This is quite easy. Share capital. So share capital, what do we know about share capital? 3 marks, parent only. For share capital, always the parent only. So for share capital, what do we have, ladies and gentlemen, here? Parent only. You guys are not talking to me. For share capital, we always take the figure of the parent only. And how much is it? 600. How much is it? 600. So remember, everything is in Kenya shilling. So as they mark, so this is 1 mark. I wish they had share premium. I wish they have it. They have it. This is an examiner who has a golden handshake. Share premium. Again, share premium, it's parent only. Share premium, it's parent only. So this parent only share premium, what do we have here for share premium? It's 500. It's 500. And then we have, ladies and gentlemen, retained earnings. So retained earnings, what do we know about retained earnings? This is a working that I will never do so long as I'm alive. Maybe in another world, but not on earth. It will be the balancing figure. I'll not even try balancing. You'll not have that time. Ladies and gentlemen, after that, I can see the next thing is called NCI. I know NCI is an equity number. Again, this one I need a working. This one I need a working after equity. After equity, I know that the next thing will be the liabilities, of which I begin with non-current liabilities. So right there, non-current liabilities, because of my space, you'll allow me to just remove these two, because I don't think I will even do them. But of course, for this question, I promise to do everything. So we have, ladies and gentlemen, here, the non-current. We have the non-current liabilities. So non-current liabilities, what do we have? Non-current liabilities, ladies and gentlemen, I can see 300 plus, we have here 300 plus 410, and this has to be translated at the closing rate, which is 2.1. Has to be translated at the closing rate, which is 2.1. From there, we have the current liabilities. From there, we have the current liabilities. So current liabilities, what we have, current liabilities, I can see we have a 2050 plus 600 divided by 2.1. Now, let me know whether up to here we are together. Up to here, are we together really? Up to here, are we together? Y for yes, are we together? Up to here, are we together? Yes, yes, great. Trust you, ladies and gentlemen, and that is why I like this. We call it a group consolidation for the dummies. If you take your calculator, trust you me, if you take your calculator and punch these things, you'll be surprised. You'll get out of, say, for example, 15. If you just punch for both of them, you can't lack 6 out of 15. Because most of these things here don't need any adjustment, like distribution cost. No adjustment. Taxes, no adjustment. Share premium, already you have a mark there. Share capital, you have a mark there. And you'll be surprised, something like now, the non-current asset, perhaps the non-current asset, of course, will have a slight difference because of the loan, that loan. And if you're bright, you should be able to pull it, remove it. All right. So you'll end up getting, if you're just an above average student, you'll be able to end up getting more than half of the marks. Great. Thank you very much. Brian has brought in a very good concept here. We don't call it exchange reserve. Remember the standard changed. The standard changed. Nowadays, we call it a translation reserve. A translation reserve comes here under equity. Please put it. Translation reserve is an easy one. Please put it. Whenever you have a foreign exchange, whenever you have a foreign subsidiary, then you must have what we call a translation reserve, which must take care of the translations of goodwill, the exchange gain or loss of goodwill on translation, and then number 2, exchange gain on loss on what here, somebody, net assets. Thank you so much, Martin. Is it Martin or great? Thank you so much. So then, ladies and gentlemen, after I reach here, I should now be able to go ahead and read the additional information. So are we ready to read the additional information? All right. So you're told here goodwill is reviewed for impairment annually. As at 30th April 2016, the impairment loss on recognized goodwill was Rwandese francs 42. This is a balance sheet item. And of course, I have the impairment will be coming later on here, but I would rather first of all leave it outside there because I don't want to calculate net assets as at now yet. I don't want. Look at note number 2. During the year ended 30th April 2016, S Limited purchased raw materials from H Limited. They did business together. S Limited purchased goods here from H Limited. Is this a downstream or an upstream? Is this a downstream or an upstream? To define that very well, you must get to know who sold to the other, who made the sale. You don't look at who purchased. You look at who sold. So in this case here, the parent sold to the subsidiary. So this is downstream transaction. Is a downstream transaction. Then, ladies and gentlemen, what they have told us here, is this. Okay. So we can see nature of goods, raw materials, date of transaction, they have the selling price. So they have, in this case here, these intra-sales of 60. What do we do with these intra-sales of 60? What do we do regarding these intra-sales of 60? There's something we must do there. The intra-sale of 60. What do we do with it? This intra-sale of 60. Oh, they are not talking to me. They are not talking to me at all. The intra-sale, eliminate it. We eliminate it from sales and the cost of sales. So you come here on sales and then you subtract 60, 60, 60, 60, 60, 60. Affects revenue and the cost of sales. Great. 60, 60. And then you have to be careful. This was a good examiner. He told you that this 60 was in form of Kenya shillings. So if it's in Kenya shillings, you know, Kenya shillings is the presentation currency. Remember, the headquarter is in Kenya here. So the 60 will not be translated. Will not be translated. But now I would want to ask you a good question. What if this 60 was Rwandese francs? How would have I translated it? And yet they have given us the exact date when that sale happened. Whenever you are given an exact date when the sale happens, you can't tell us that Mwalimu told us always for the income statement we shall be using average. Who said that? If you're given an exact date of a specific transaction, translate that particular value as at the, or rather using the exchange rate that prevailed on that date, But the good thing here is that they gave us this in form of what here, Kenya shillings. So really when the date there is irrelevant. It's irrelevant. Now, ladies and gentlemen, whenever there is an intra-sale, there is always something that I must think about. Whenever there is an intra-sale, there is an immediate working that follows. Is there somebody who is able? UPS. Thank you very much. So please go ahead and compute the famous UPS. Go ahead and compute the famous UPS. I'm telling you, these are free marks. These are free marks. So go ahead and compute the UPS. I would want to see whether there is any student of mine who will be able to compute this UPS for me this morning. I mean, it's long since I gave anybody any present. I mean, it's long. Like I can see this guy called Tony. I think Tony is a newcomer, a new student who is very aggressive. So you see now, Vero, as you say, where you're losing a gift. That energy you've used to type there, you should have gotten me an answer, Vero. He has already done it. So UPS, ladies and gentlemen, is profit margin times risk. Profit margin times remaining intra-sales times remaining intra-sales. So this was a great examiner. So this examiner has already given me something. From note number two, I can see the profit percentage on the selling price. Profit percentage on selling price, that is margin. So the profit margin has been provided to me as 20%. How about remaining intra-sales? They have told us there as at 30th April 2016, half of the raw materials purchased was still in inventory. So out of the 60 inventory value, a half are still in inventory. So then these will end up giving us that. So the remaining intra-sales is what is left unsold. So this gives me how much somebody, is there somebody who is able to get that 6? Thank you, Faith. Yes. Honorable Nick alipotea sana siku hizi, but we shall overcome. Great. So in this case here, yes. So then what do I do with these 6? Fortunately, it's in form of Kenya shillings. I will not be needing to translate it. It's in form of Kenya shillings. So Honorable Nick is saying that I less it from cost of sales, Honorable Nick. Oh, you've already rectified. Add it to cost of, yeah. Oma. Any unrealized profit is an expense to the company. Unrealized profit is an expense to the company. You can't subtract it. Unrealized profit is expensed. So you add it to cost of sale. That's what I told you. Always UPS. You can even cram this. I even remember I came and sang for you some chorus. I told you some of these things are supposed to be choruses. You may forget about every other part of the stanza. You may forget about every other part of part of the music. But there are those particular choruses that you must always do remember. Like whenever I get to UPS, I'll always add it to COS, I'll always add it to cost of sales, and I will always subtract it from group inventory. Add it to cost of sales. Abraham is also saying the same. Ngoja kidogo. I think there is confusion. There's confusion. You can't get so many students confusing like this. There must be a problem. I don't know whether I'm the one who misled you. Because whenever you have UPS, what does it mean? That the inventory is overstated. And this inventory, when inventory is overstated, so we have here cost of sales is opening stock plus purchases minus inventory closing. So whenever this closing stock is overstated and I'm subtracting it, then it means that my cost of sales is understated because I've overstated stock. Closing stock is a profit thing. Closing stock. Whenever closing stock is overstated, whenever it's overstated, automatically your profits are overstated, but your cost of sales is understated. And if it's understated, to make good, you always add. We don't want to go into those many semantics, really, many English words. No, we want to make our life easy. And this is what I would want you to write there, that always UPS, add UPS to cost of sales. Subtract from what here? Somebody subtract it from inventory. So in this case here, come to cost of sales, you say plus 6, and go to inventory here and subtract. I cannot see inventory in my balance sheet. So if I can't see inventory in my balance sheet, what should I do? Cry? What should I do? Should I start crying? You know, there are very many things that would really beckon for a great inventory is in the current assets. So come to these current assets, you do what here? You subtract. So before I proceed, up to here, are we together? Because you see now, these ones I'm almost now the If I was to stop now here, now I'm past the half mark. Are we together up to here, first of all? Great. Thank you so much. So we continue then. So then they're telling us down there that H Limited issued an interest-free loan to S Limited of Kenya shillings 50 million on 1st May 2015. S Limited issued a loan to S Limited, which is in Rwanda. All right. The loan was repaid on 31st May 2016. 31st May 2016 is way after our reporting date. Our reporting date is 30th April 2016. All right. S Limited includes the loan in its non-current liabilities. I want you guys to do something for me there, which is quite simple. I would want you guys to analyze that loan to S and tell me what is the exchange, foreign exchange as per IS 21. As per IS 21, what is the foreign exchange loss or gain? A loss or gain. Let me give you 1 minute. The loan is normally the easiest. The loan is normally the easiest. The loan is normally the easiest. The loan is normally the very easiest thing, really, really, really. I love it. Whenever a parent gives the other one a loan, then this is a very easy thing. This is an examiner who is greeting me with a golden hand. So it's a golden handshake, not like these handshakes between our political kingpins. All right. So, ladies and gentlemen, in this case here, what am I doing? I'm analyzing the loan. According to IS 21, whenever a loan is given, you have to analyze it. So we have the loan there as at the date given out. At the date given out, how much was the amount? At the date given out, how much was the amount? 50 million. Thank you very much. Kenya shillings, remember. And then we have in this case here at reporting date. At reporting date, the 50 million is still outstanding, the whole of it. The whole of it. So in this case, I would want to translate this, the rate of translation, because this money was given to a foreign subsidiary, so I have to translate it back to the foreign Rwandese francs. Rwandese francs. So is there somebody who is able to see the rate here? So the rate, when I was giving out this loan, what was the rate, foreign exchange rate? When I was giving out the loan, what was the foreign exchange rate? They're not talking to me. When I was giving out the loan, so the loan as at issuance date. As at the issuance date, 50, the rate was, I'm being told it was 2.5. These were Kenya shillings. And now these are Rwandese francs. And then as at the date of financial statements, as at the date of financial statements, still the loan is outstanding. And as at the date of financial statements, what is the exchange rate? What is the exchange rate? As at the date of financial statements, what is the exchange rate? 2.1, right? 2.1. All right. So then can you kindly go ahead and translate for me? Give me the Rwandese francs. Give me the Rwandese francs. Please give me the Rwandese francs and then we compare notes. Give me the Rwandese francs and then we compare notes. Give me the Rwandese francs and then we compare notes. Usiogope kuandika chochote. Usiogope kuandika chochote. Usiogope kuandika chochote. Usiogope kuandika chochote. They are telling me, but mwalimu, the first one is supposed to be 125, 125, 125, 125, vis-a-vis what here? 105, 105. Remember, these exchange rates given, ladies and gentlemen, the exchange rates given, if you look at the question paper, the exchange rates given are Rwandese francs per Kenya shilling. They are Rwandese francs per Kenya shilling. So whatever you are seeing here is 2.5 Rwandese francs equals 1 Kenya shilling. So how about 50 Kenya shillings? How about 50 Kenya shillings? So in this case here, of course, we must do what here, cross multiply. So it'll be 50 times this. So these guys are correct. So when we borrowed this loan, it was worth 125. It was worth 125. All right, it was worth 125. And by the end of the year, the loan is now worth 105. It's not because we have paid back anything. The loan has reduced simply because of what your foreign exchange, simply because of foreign exchange. So can somebody in this case here give me this gain? Can somebody give me this gain? Can somebody give me this gain? Can somebody give me this? There's a gain there. There's a gain there. There's a gain there. There's a gain here. So I'm being given a gain of 125 minus 105, which is 20 Rwandese francs. Rwandese francs. Rwandese francs. So we had a gain there of 20 Rwandese francs. 20 Rwandese francs. 20 Rwandese what here? Francs. 20 Rwandese francs. 20 Rwandese francs. All right. So remember, this is at reporting what year? This is at reporting date. This gain, we are booking this gain at reporting date. We are booking this gain at reporting date. Then the thing that I need to do, because I've booked this gain at reporting date and I'm the accountant, and I'm now supposed to come and translate this to Kenya shillings at 20. Please go ahead and translate that 20 to Kenya shillings. Is there somebody who can do that for me? Translate that 20 to Kenya shillings. Because now I need to consolidate my performance. I need to consolidate my performance. I need to consolidate my performance. Is it 10? I know guys are using, it's 9.5 years. I know guys are using like the average because it's, no. Remember, this gain has come to us at the end of the year. At the end of the year when we were closing our books. So in this case here, we need to retranslate this at 2.1 at the closing rate. So retranslate at closing rate. Because the gain is at the end of the year, which is 2.1. At 2.1 Rwandese francs. So what is 20 divided by 2.1? 20 divided by 2.1 gives me what? Somebody here gives me 9.5. Somebody has multiplied. I know why. I can't blame you. Please remember, these are Rwandese francs per what year per Kenya shilling. So then I would want you, because this is an income, this is an income to us. So please, if it's a gain, come and book it here. After gross profit, squeeze here. Talk of gain, it's a gain on what year? Forex. Loan forex. Talk of loan forex. Again, on loan forex of 9.5. Loan forex of 9.5, like that. In terms of Kenya shillings, just book it to the end. Book it to the end. Book it to the end. And I'm not, in this case, you're scared. Even if you have not understood this, I mean, how many students in Kenya will be able to do this? It's about keeping the wheel rolling. Now, ladies and gentlemen, after that, in the interest of time, this is what I want us to do in the interest of time. So in the interest of time, we are told there, it is the group's policy to value NCI. Great. Then I would want us now to skip everything and calculate net assets of the subsidiary. Let's calculate the net assets of the subsidiary. Let's calculate. I promise to have this done to the end. Otherwise, if you're a student, by now you should have gone to a different question long time ago. Long time ago. You should be doing a different question long time ago. But you see, for me, I can't make that assumption. Why? Because at times the examiner comes and tells you, hey, compute net assets alone. Compute goodwill alone. So I have to show you. So then I would want us straight away to go and get the net assets of the Rwandese subsidiary. So net assets of the Rwandese subsidiary. Net assets of S. And remember, we are doing this in foreign currency, Rwandese francs. Net assets at the date of acquisition, at the date of financial statements. Abracadabra, we have share capital. We have share capital. We have share premium. Share premium. We have retained earnings. We have retained earnings. Why was I doing UPS? I was doing UPS because of what year? Because of the income statement. Because of the income statement. Okay, so these are basically those workings that if I'm the one doing, I will not do them in an exam. Because UPS, that is an easy one that I have to do it. These are those ones that I should be able to run away, especially whenever the examiner gives you a consolidations of income statement and a consolidations of balance sheet. He wants to waste your time. You'll not get time here. I wish we started timing ourselves when Mwalimu started doing this question. I want to believe I must be into my whole hour doing this. I must have taken more than an hour doing this, and yet I haven't finished. Even if I'm teaching, I'm so sure even if you were to do it in your exam alone, you'll not be able to use a higher speed than mine. I'm also a very fast teacher. All right. So why am I saying all these? Somebody can say they are bad things. It's because I want every student to know how to manage time in an exam. 1 hour, 7 minutes, you can see. It's more than, yeah. It's more than, yeah. So we have share premium. We have retained earnings. We have retained earnings. And then I have fair value adjustment. And here I always pray that they tell my students the fair value adjustment is on land. If it's on land, there is no depreciation. If it's on land, there's no depreciation. So can you kindly give me the share capital? Share capital of the subsidiary. Are you able to give me the share capital of the subsidiary? Are you able to give me the share capital of the subsidiary? Are you able to give me the share capital of the subsidiary? Share capital of the subsidiary. Oh, yeah. They are not talking to me. Share capital of the subsidiary. I can see a ninja saying 600. You see, 600 is share capital of the parent, H. Here we are looking at the subsidiary. So it's 320 Rwandese francs. So share capital never changes. Share capital is always the same across. I don't know where Ruth has gotten that 152, but we choose to not talk about it so long as Ruth have been able to see 320. And then we have share premium of 200. Share premium of 2. This never changes across. Retained earnings, I must be a bright chap. I know retained earnings, the one given there is at reporting. 950 is at reporting, is at the date of financial statements. Then how about retained earnings? Retained earnings at acquisition. Is there somebody who is able to see retained earnings at acquisition? Retained earnings at acquisition. Tony is giving me a figure of 800. Retained earnings at acquisition. Yes, first paragraph there. The first paragraph, they're telling me H Limited acquired S Limited on 1st of May, S Limited, when in this case, the retained earnings there were 800. Thank you so much, 800. Do we have any fair value adjustment of a subsidiary asset? Any fair value adjustment of a subsidiary asset? Any fair value adjustment, any revaluation? Any revaluation? Is there anybody who is? Yes. I can see note number 4. Note number 4. The fair value of the net assets of S Limited as at the date of acquisition is assumed to be the same as the carrying value. What do you think of that statement? What do you think of that statement, ladies and gentlemen? What do you think of that statement? What do you think of that statement? No revaluation should start dancing, even in an exam room. No revaluation, no revaluation, no revaluation whatsoever. No revaluation whatsoever. So fair value basically nothing there. So please give me the totals here. Please give me the totals. So total net assets. Total net assets, what do we have here at the date of acquisition? At the date of acquisition, this great lady called Grace is giving us 1320. And then we have at the date of financial statements, at the date of financial statements, we have 1470. 1470. So please give me the PAP. Give me the PAP. So the PAP will be 1470 minus 1320, which gives me what figure somewhere there? 150. 150. This is so interesting to me. And if I'm doing, ladies and gentlemen, a foreign subsidiary, don't be apportioning this here. You'll apportion it later. If you don't want it to confuse you, don't apportion it there. So then what I would expect you to do for me very fast, please go ahead and give me Goodwill. Give me Goodwill. Give me Goodwill. So Goodwill, and again, remember this will be in Rwandese francs. So Rwandese francs. So is there somebody who is able to see the parents' consideration? The parents' consideration. The parents' consideration equals who? The parents' consideration equals who? 1,200. Rwandese francs, 1,200, 1,200. Is there anybody who is able to see the fair value of NCI at the date of acquisition? Is there anybody who is able to see the fair value of NCI at the date of acquisition? Fair value of NCI at the date of acquisition? Anybody who is able to see that? The fair value of NCI at the date of acquisition? They are not talking to me. They are not talking to me. It's the group's policy to value NCI interest, that's not number 7, at acquisition at its proportionate share of the fair value of the subsidiaries' identifiable net assets. So ladies and gentlemen, basically there, I'm using what we call the proportionate method. I'm using what we call the proportionate method. There are 2 ways here, remember. Full method and proportionate method. And even in this proportionate method, there are 2 ways. 2 ways. The first one is to come and take just the parent's consideration, and then I say less net assets. And because I only considered the parent's consideration, I'm taking the share of parent alone. Who is able to remind us that, here we only control 75%. So 75% of the net assets at acquisition, which were 1320. So it's proportionate method. We only recognize the proportion of the parent. We only recognize the proportion of the parent. We only recognize the proportion of the parent. So 75% times 1320 gives me what? Somebody there. 75% times 1320 gives me what figure? Somebody there as we disappear. Gives me what figure? Somebody here as we disappear. 990, right? So we have here 990. So we have here 990. So when you subtract like that, then you should be able to get goodwill at acquisition. Goodwill at acquisition. Is there somebody who is able to give me this goodwill at acquisition? 1200 minus 990? 210. So this is one approach. This is one approach. I'll be subtracting the impairments. One approach. I would want in this case here to show you the other approach. The other approach, still partial method, or proportionate method, partial method, or proportionate method, or proportionate method, partial method, or proportionate method. So method 2, still partial method. So method 2 will come and take the parent's share. So parent's consideration, So parent's consideration is 1200. And then you come and give us the fair value of NCI, of which they have told you to take 25% of the net assets. So 25% of the net assets, this was 1320. This was 1320. So 25% of 1320 gives us what figure, somebody? 0.25 times 1320. 0.25 times 1320 gives us what amount? It gives us 200, and what here, somebody? 210. So then can you kindly give me the total? Can you kindly give me the total here? Kindly give me the total here, 1200 plus 210. So this gives me 300, and what here? 300? No. Oh, they're telling me it's 330, yeah? They're telling me it's 330 there. So please give me the total there. Pretty first. Please give me the total there. Give me the total there. Pretty fast. Give me the total there. So it gives me 870. No, we're supposed to add. Fair value of NCI, we're supposed to add. Fair value of NCI, we are adding 1530. So 1530. And then after you get that, you'll come and now less the total net assets. Remember now here, you have accounted for 100% because this 75, this 25. So you'll come and less the total net assets at acquisition. At acquisition, which was 1320, you subtract like that. Which was 1320, you subtract like that. And then whatever you get will be your goodwill at acquisition. Goodwill at acquisition, which in this case here will be the same amount. I really hate this method. I don't like it at all. This is a method. Whenever they talk of partial method, this is a method I always like. What about, in this case here, yourselves? Which method do you think should we stick with? Method number 1 is far much better. It's far much better. Whenever they mention the word partial net assets, you tell them, no, I know this method is straightforward. This method is straightforward. It doesn't need thinking. And the more methods you use which don't need a lot of thinking, the better for you, the better for you. So ladies and gentlemen, I'll be uploading this very video because I want you to start watching it, I'll be uploading this very video, this one here, on YouTube. And then, of course, I'll send the link to you. When you get my link, it's important is that you subscribe and, of course, share those links with many people there. There are many, many students who are struggling with this consolidation who would want what year help. And, of course, the moment they watch also for free, they need to come and look for us. And then they, of course, pay fees. They study with us. This is our number, 0719 525,000. Otherwise, it's been a pleasure hosting you in the morning. I believe we are adding value to you guys every other day. Bye-bye. 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 Great.